All right, in this video, we're going to do a walkthrough of my investment holdings and pull back the curtain and just show you everything that there is to show. If you have any questions or comments or suggestions of things you want me to show in the future, just comment them below. So I do most of my investing at Wealthsimple. I also do have a smaller account at National Bank Direct Brokerage. And then I also own a townhouse that gets rented out. And so that's kind of, how my where my holdings are. About 200,000 invested in the stock market, and then townhouse worth a little over $300,000, and 100,000 of that is actually paid off. So, but focusing on Wealthsimple, they have a few different product offerings. So the first one is their stocks and ETFs option. I don't do any crypto, but through stocks and ETFs, you're able to invest into specific stocks in Canada and in the US, as well as exchange traded funds. Exchange traded funds are essentially baskets of stocks. And so you've probably heard about the S&P 500, and that's where you can buy an exchange traded fund that tracks the S&P 500 index, which allows you to very easily invest in the largest 500 companies in the States. So if we look on here, I have three different accounts. Um, and so we have the non-registered account. This is just your most basic account. There's no real tax advantages to this account at all. We also have the RRSP account, which is designated for retirement. When you load money into this account, you get to receive a tax benefit for however much you contribute. But then when you do withdraw from this account, you do pay taxes on the withdrawals. So you're not paying taxes on any of the income that you make that gets deposited into this account, and you're essentially deferring taxes to later. And then the tax-free savings account, one of the most popular accounts in Canada for investing. This is where you get a certain amount of contribution room, it's called. The way you can think about it is it's a bit like a piggy bank. And each year, the piggy bank gets a little bit bigger. The government lets you put a little bit more money in that's tax free. And so if you just Google tax free savings account calculator, and if you plug in your birth date, you're able to figure out what your contribution room is. You can also go to the CRA website, the Canada Revenue Agency website, and it'll actually tell you what your contribution room is that's available to you. So if you haven't contributed in the past, your contribution room accumulates each year, and so you don't lose it. If you didn't use it the last 5 years, then it'll just pile up and be available to you. So let's dive. Actually, just quick overview before we dive in. So, 175,000 in total here, and then we have 55,000 in the non-registered accounts. This one has gone up 18%, so I've seen a 48% return. On the RRSP, 36,000, that's gone up just under 2 grand, so about a 5% return. I just started recently seriously investing into this account, so a lot of this is new deposits here, so it hasn't had a lot of time to grow. And then the tax-free savings account, 82,000, and then this has grown by 21,000 or 34.8%. So let's dive into the non-registered account here. We can see all-time the history of the account. So I actually opened this account late 2019, invested a bunch of money in it, and then I did take a big chunk out because I ended up doing a down payment on the townhouse, and so that's what that big drop is. So the solid gray line here is the actual deposits, and then the moving green or blue line is the actual account balance. So you can see here kind of the different deposits I've done, and over time have been, you can see how much that's gone up over the course of 2022 here, and then it's gone down, a bit of a turbulent time. And then most recently, I decided to take a little bit of money out because I wanted to put some money into the National Bank Direct Brokerage to check that out. So this account actually only has two holdings. I have VCE, which is the top 50 companies in Canada. And then I also have VFE, which is the largest 500 companies in the US, which tracks the S&P 500. So those are my two holdings in that account. I have, actually, I don't have any automatic transfers of deposits going into this account right now. Now we can go over to my tax-free savings account. So 82,000. It's kind of weird. So if we look at all time here, I don't believe I've ever taken a penny out of this account. Yeah, so Started this one early 2020, and you can see the deposits that I've made and then the growth in this account. And then most recently, let's look at the past year, I have very consistent deposits. It's very subtle. You can barely see it. I think it's like I think it's $224 a week. So in this account, I own right now a bunch of cash. Or not a bunch, I guess very little, but I have $2,000 of cash ETF. This is a high interest ETF, currently paying just over 5% annually, paid out monthly. TPE, this is about 1,000 international companies, so like Nestle, Shell, Toyota, so 21,000 in there. VCE, this is the previous one I showed you, the top 50 companies in Canada, 33,000 in that. And then VFE, the largest 500 US companies, 26,000 there. So you can see the returns over time. Some people ask me, why do I have money in international? It's gone down. I mean, we do have very turbulent economic situation worldwide, various wars going on. So although this account or this specific ETF has seen a loss recently, I do believe that over time it will have good returns. Obviously, historically, VFE in the US economy has returned the highest returns over time. I do expect that VCE will kind of be next in place, and then TPE returning probably the lowest of all, maybe around 4%. The thing is, though, it's just important to have that diversification, and so even though not expecting incredible returns from TPE, it is important just to have that diversified investment worldwide. And now let's go to the RRSP account. And again, this is giving us a black chart here. Refresh this here and look at all time. So I set up this account in early 2022. But as you can see, I've done a lot of deposits, quite recently. For quite a while, this account was pretty flat. And so the holdings here, this is where I have a bunch of cash ETF. So 31,700, and then again VCE, VFE. I only actually hold 4 ETFs in total, so there's not a ton of variety. If we go to portfolio here, actually it doesn't even show me the list of the holdings. But as you can see throughout this, though, I have VFE, which is the S&P 500, VCE, the top 50 companies in Canada, TPE, 1,000 international, and then the cash ETF. So those really are the only 4 holdings that I have invested in right now. Some people ask me why I'm not invested in something like VEQT or XEQT. I think that these are excellent choices. The only thing with these is that the allocation in terms of the different markets and countries is set. So you can't choose, if you want to have more invested in the US or you want to have less international exposure or whatever that might be. So these are excellent options. In my case, I am planning to invest significantly more in the US. I believe between VEQT and XEQT ETFs, I believe it's between around like 30 to 45% is invested in the US markets. I want to have a lot more percent of my portfolio invested in US, and so that's why by investing in the individual ETFs that I've selected, I'm able to control what percent is kind of in each ETF. So that's the stocks and ETFs, pretty straightforward. Now let's go to managed investing. So I have just one managed investing account. It is a locked-in retirement account. You actually can't just open one of these if you want to. There's specific circumstances that allow you to open up a LIRA. In my case, the reason for that was that I had a pension at a previous employer, and when I left that employer, the pension was worth, I believe it was around 18 or 19,000. I guess we can click into this and see. Can we see? Yes. So this opened at the end of 2020. The account value was 18,800. So I believe there's some kind of a rule that if the pension is worth less than 20,000 or 25,000 or something like that, you're able to just withdraw the pension and take it with you. Actually, I might be mistaken on that. It might be something like if it's worth less than 10,000 or 15,000, you're able to just withdraw it as cash outright. and then if it's worth a certain amount, you can transfer it out. There's different rules, and it really depends on your employer and where the pension's invested. Sometimes you can't even take the pension with you. But in my case, I was able to take it with me. So I transferred over to Wealthsimple, so 18,800. But when you transfer out the pension, you can't just, in the case where it's under whatever it is, 10 or 15,000, you can take it as cash and then do whatever you want with it. Then you could put it into a non-registered account, into a tax-free savings account or an RSP. But in this particular rule where I was able to take my pension with me, it had to go into a locked-in retirement account, which is designated for retirement. I'm not actually able to deposit money into this account, even though in Wealthsimple it shows an option to deposit. You actually are not able to do that. And so this is managed where I'm actually able to set the risk level that I want. So I have it right now set 10 out of 10. And over time, this account's returned 14%. So I've made 2,700 on that account. And those are really the only choices. You can choose the theme. I believe there's 2 or 3 different themes here. So there's classic, socially responsible, and then halal. I just have the classic theme. And actually, we can look at the account. See the holdings here. So this is the makeup of this account. And then you're able to choose the risk level. You can see the holdings here. So if we were to take this down to something like 5, then we would see the equity investments are shrunken quite a bit. And then we have here a lot more in bonds and even like gold. So that's how that works. I have it set to 10 out of 10 for now, and then we can see the projections, based on when I'm 60 years old, 284,000 in that account. So that's the managed investing. And then the last one I'm going to show you here is the cash account. This is a high interest savings account that Wealthsimple has. Right now I'm earning 5% on this, and I have just over 8,000 in this account. So quick overview of Wealthsimple. As you can see, the interface is very straightforward and pretty easy to use. And then the web functionality is a little bit limited, but they have a really great app on mobile, which allows you to do a lot more and set up all kinds of things like recurring transfers and all kinds of stuff like that.